All right, we just got done talking about Airbnb's red-hot IPO. Also discussed DoorDash, their IPO as well. The U.S. market has seen about $160 billion in IPOs this year, despite the pandemic. So what about Nigeria? What about the Nigerian Stock Exchange? Where's the IPO euphoria? Why aren't we seeing new companies coming to the Nigerian Stock Exchange to list? What reasons can we ascribe to the lack of IPOs in Nigeria? Well, joining us to answer this question is Seyi Omidiora, an analyst at Financial Derivatives Company Limited. Seyi, good morning to you. Thank you so much for joining us. So Nigeria, after a flurry of IPOs in the 2008-2009 era, it's been a complete dearth of IPOs. Now, of course, for our viewers, initial public offering. For example, last 5 years, who are the last two? Skyway Aviation Handling Company and Transcorp. What do you think is responsible for this lack of IPOs in the Nigerian market in recent years?
Thank you very much. Now, the macroeconomic environment in Nigeria hasn't been particularly favorable for IPOs. In the last 5 years, since 2015, we have experienced about 2 recessions. Now, that isn't a particularly good thing for private companies who are looking to go public because they believe they will not be able to get favorable valuations for their equities. Now, we have also seen the effect of these recessions on the stock market and corporate performance. These, of course, haven't been good enough. Now, we go ahead to look at Interswitch, who also wanted to list locally earlier this year, but had to postpone because of the macroeconomic environment. That's one of the factors that has come into play, and that's one of the things that has affected IPOs in Nigeria. Another thing we have to look at is the local apathy towards Nigerian securities. Most of the dominant players in the Nigerian market are international investors and local institutions who have to invest due to regulatory restrictions. Now, for international investors, as soon as at the first sign of trouble, they dip, which leaves just local investors and they have to do this because of regulatory restrictions. So those are the factors at play here.
Fantastic. Great stuff. Thank you for that. Very, very illustrative. All right. So on the money market side of things, we've seen in the last 2 years about 15 or so companies that have issued commercial papers, bonds, and the like. Do you think this trend of financial disintermediation will extend from the debt markets to the equity markets in terms of IPOs in 2021?
Now, the flurry of debt securities we have seen has been driven mostly by the favorable interest rate environment, which has pushed corporates to securitize their debts, to go for bank loans, for example. They turn them to securities. Now, that has been a factor, that has been as a result of the low interest rate environment. Now, the same conditions don't quite hold for equities and by extension IPOs. There has to be, for IPOs to happen, there actually has to be an inflection in the economic fundamentals before there can be IPOs, because that is when private companies that are looking to list locally can actually believe they can get valuable valuations for their equities.
Great stuff. Okay, so what are the wider implications of a short supply of IPOs on the volatility of prices in the Nigerian stock market? I mean, market's done about 28% so far this year. What do you think the implications would be?
Okay, now for the Nigerian Stock Exchange, there isn't a lot of the short supply of IPOs actually means the breadth, the width of the exchange isn't wide enough, which actually limits the investment opportunities where investors can put their money in. This is a problem because with a few number of companies in the industry, then fewer companies can actually have a lot more impact on market performance because of their weightages. If we look at Dangote, for example, or the stocks in the banking industry, they have significant weightages in the market. They have significant weightages in the market, and they can actually have their performance can actually have an impact on the overall market. And this is not good for volatility because there aren't a lot of stocks we can trade, and the performance of this little amount of stocks can have an impact on the overall market.
All right, great stuff, Seyi. Okay, I know you don't have a crystal ball, but I do want to ask you what your outlook. It's already December. We're moving into 2021, so I might as well ask you this. What's your outlook for the stock market and by implication, financial markets as a whole in 2021? Do you believe there'll be a change as the economy goes into recovery mode?
Okay, now, as I said earlier, the equity market has been mostly driven by investors searching for yields. Now, yields have been mostly low this year, so they have searched for other investments wherein to put their money. Now, we can't tell for certain how long this bull run is expected to last. We don't know whether it's sustainable. Other things we need to look at are fiscal policy going into next year. Is there going to be a lot of government spending to boost the economy? How do we intend to fund our deficits, for example? Now, we also need to look at the monetary policy. Will the CBN keep up with its unorthodox policies? Of course, there's going to be the reopening of land borders, and we don't know for certain how that is going to impact the larger economy if the current situation persists from fiscal side of things and the monetary side of things.
Great stuff. Great stuff. Seyi Omidiora, analyst at Financial Derivatives Company Limited. Thank you so much for your thoughts. We appreciate you coming through.